So there are broadly two order types: the instant order or the pending order. For the instant order is either a buy market order or a sell market order. For the buy market order, it's when the trader instructs the broker to take a long position, a buy position on a currency pair. And the sell market order is where the trader instructs the broker to take a sell position, a short position at the current time and the current price, so not at a future time. Now, the difference between the instant or market order and the pending order is, for the pending order, the trader is asking the broker to enter a trade at a future time and at a future price. And that's the difference between instant and pending. Now, for the pending order, we have two types of pending orders. There is the stop order, which is either buy stop order or sell stop order, and there is the limit order, which is either the buy limit order or the sell limit order. Now, the buy limit order is where the trader instructs the broker to buy at a position and at a price which is lower than the current price. So I want to buy, but I want to buy at a lower price than where price is now, in anticipation that price will drop to that lower price. Then I want to buy and ride an up move. The sell limit order, again, remember sell meaning that I anticipate the price will go down. However, I'm not going to take an instant market order. I want to take the trade at a future time, at a future price, at a different price. And for the sell limit order, I'm expecting price to rise first. And so I want to take the trade at a price higher, a sell trade at a price higher than the current price. And it's just reverse for the buy stop order. Now, the buy stop order is a situation where the trader instructs the broker to buy at a future time and at a price higher than the current price. And the sell stop order is when the trader instructs the broker to sell at a future time at a future price that is lower than the current price. Now we'll move to the chart and I can just explain this a bit further. Right, so let's recap on the type of orders. Price is currently on the USD CHF at 1.0073. Now, if I want to take a market order, which is an instant order, and I want to take a buy trade, I click on new order and that opens up. I select the volume, the trade size. I select the stop loss, and just for illustration purposes, for a buy trade, the stop loss can be here, which is 1.00228, and I'll just enter that figure there, 1.00228, and I can decide to put the take profit. 1.00228 is about 52 pips. I can decide to go 75 pips just for illustration, and that'll be 1.01486. 1.01486. Now, so the volume is 0.02. The stop loss is 1.0028. Take profit is 1.01486. Now, the type of trade, in this case explaining an instant market order, and that is market execution or pending order, but I'm going to choose market execution, and then all I need to do at this point now is press buy by market. Once you hit that button buy by market, the broker fills you in at the current bid or ask price. In this case, it will be for a buy order, it will be ask price, the current ask price. You'll be filled in at that level. Now, if for whatever reason I decided to sell at that price, at that current price, similar technique, I choose my stop loss, which the stop loss must always be, in the case of a buy trade, so let's retrace. In the case of a buy trade, the stop loss must always be lower than the entry price and the take profit higher than the entry price. In the case of a sell trade, the stop loss must always be higher than the entry price and the target take profit must always be lower than the entry price. So right now price is at 1.00733, and so for a market sell order, all I need to do is to set my stop loss, which will be at a point, say around that level there, 1.01168, 1.01168, and my take profit, if I enter here, 1.01168, 1168 is about 44 pips. So if I go 60 pips the other direction, it'll be 1.00114, 1.00114. And all I just do then is hit the sell by market button. Just hit that button, boom, I get filled into the market. Now explaining the pending order. So if I select the pending order, you'll find that this change, and then in here I've got buy limit, but there are 3 orders. So you've got the buy limit, the sell limit, the buy stop, the sell stop. Now this is pending order on a future time, at a different price from current price. And so for a buy limit, remember, a buy limit, I'm anticipating the price will go down first before going up. So for a buy limit order, I must place the order at some place below the current price, anticipating that price will come back down and before it starts to go up again. And so for illustration purposes, let's just assume that I'm anticipating the price will get down to 1.0050 before it starts to move back up. Then what I would do will be set a buy limit order 1.0050, and I can at this point as well, because it's going to be a buy, if I get filled into that trade, it becomes a buy trade, which means that my stop loss should be below my entry price. So my stop loss must be below that 1.0050 that I put there. And in this case, just for illustration purposes, I can decide to have a 40 pip stop loss, which will be 1.0001. So stop loss will be 1.0001, and my take profit, again, I can choose to be there, 1.01409. So 1.01409. And all I just need to do is hit the place order. I've not got connections now, but just hit place the order and boom, I'll get filled into the market for a buy limit order. For a sell limit order, I'm anticipating the price will go down, but because it's a sell limit, I'm expecting price to first go up before it starts to push down. So I'll place my sell limit order, say at about 1.00935, which I will just put the number there, 1.00935, and then for a sell order, my stop loss should be higher than my entry price. So I will put my stop loss somewhere up there, 1.01423, 01423, and my take profit will be somewhere below, which is for a sell order I'm expecting price to go down. I can put it at 0.9995, 0.99955, and that's it. It's ready to go now for a sell limit. Now the other two, buy stop. For a buy stop, since I'm anticipating price to go up, I will place a buy stop order above the current price. So as an example, 1.00879, 1.00879, and then stop loss will be below 1.00210, 210, and take profit will be somewhere higher, 1.01460, 0.01460, and I'll just hit the button place, and I'll just place a pending order, pending buy order. And the similar but in the opposite direction for the sell stop order. For whatever reason, I believe price is going to push its way down and continue to go down. I'll place a sell stop order, say at this point, 1.00491. 491. Again, in all these cases, remember the volume, the trade size must already be calculated by using the Excel spreadsheet. And then this is a sell stop order, which means my stop loss must be higher than my anticipated entry price. So I can put the stop loss there, 1.01164, 0.1164, and then my take profit will be below my anticipated entry price. So I can put it on there, 99662, 0.99662, and that's it. Just hit the place button, and we then expect price to continue to go in the direction we anticipate. Okay, I hope that's a bit clear for you. Now, how do you get this open? We can see that new order button there, or the F9 button. Okay, keep the questions coming, and we should be able to explain a bit more of this. All right, cheers and good night.